You must be hearing about the US Fed's 50 BPS rate cut everywhere. So, what's that all about? How did it impact Indian markets versus commodity markets, and what are the sectors in focus now? Let's take a look at all that in today's special ET episode. Here are the top 6 things to know. Number 1, Fed's credibility at risk. The US Fed surprised the markets with a 50 BPS rate cut, raising questions about the contradiction between the move and a strong economy. Wall Street reacted negatively, and analysts fear more rate cuts may follow. This is only the third instance in history where the Fed has initiated a rate cut cycle with a 50 basis points reduction, with the last occurrences being in 2001 and 2007. Markets seemed to be unsure of how to interpret this, as Powell's explanation lacked consistency. Nomura analysts warn the Fed's credibility is at risk. Number 2, rate cut versus Indian markets. Blue chip stocks in India rallied, driven by hopes of higher inflows into emerging markets like India. Sensex jumped over 700 points during the day, while rate-sensitive sectors such as banks and autos saw strong buying as well. Nifty too hit new highs. Number 3, sectors in focus. Experts suggest focusing on large-cap private banks, telecom, consumption, IT and pharma for better safety margins. A weaker dollar and global liquidity are expected to boost the emerging market assets, benefiting Indian stocks, especially in rate-sensitive and defensive sectors. Number 4, global and domestic impact over time. US Fed rate cuts will lower borrowing costs for mortgages, auto loans and credit cards, along with business loans. Now, as business spending grows, stock prices too would grow in the US. Refinancing of loans into lower rate debt is expected. Higher spending could boost the US economy, which will impact Indian markets positively as well. Number 5, rate cut expectations in India. Experts predict the Fed's rate cut may lead to similar moves by the RBI in India. There could be 225 BPS cuts possible before March 2025 as inflation is under control. Lastly, number 6, gold. Rate cuts generally boost gold prices due to lower opportunity costs, a weak dollar, rising inflation concerns, and market sentiment. However, it's quite tough to predict precious metal prices as they are dependent on various global factors, geopolitical tensions, etc. Well, that is all for today. Stay tuned to ET Markets for more.